Hang Seng is continuing its gains it saw yesterday as well, 140 points higher there.
Power Grid slightly soft quarter impacted by subdued commissioning trends.
We are in the process of growing further and expect to reach 4 million by 2030.
There we have it. The first tick on the index in the green right now, so 30 points higher on the Nifty.
We expect a margin of around 11% in EBITDA over a full year period.
We see that volume growth going forward, and the set of numbers has also been helped by some of the new product launches that we did.
The indices are absolutely flat, but the good thing is the advanced decline ratio is currently holding up.
This is a big positive for Mahindra and Mahindra, the fact that their electric vehicle business will get another round of fund infusion.
July 2023 numbers look quite good. So the production numbers are up by close to around 13%.
Recently, Directorate of Revenue Intelligence had caught a passenger with huge amount of foreign currency, which is linked to Hero MotoCorp and Pawan Munjal.
Absolutely flat with some negative bias. It's been very range bound today.
Well, that was the day so far. It's an absolutely quiet day on Dalal Street so far this Tuesday afternoon. We are coming to you live, as always, from the CNBC TV 18 Moti Rosewal studios. I'm Prashant. With me, my colleague Surabhi and Rima here in the studios. And Nigel, of course, is joining us from the newsroom floor. Guys, hi. Not very much to comment on at all today, so I think we can keep it very, very short. It's flat. I mean, it's basically blinking like a traffic signal, if I can say. You know, red, green, and back in the red again. So that flat, we've not had that flat a day for a while. We'll be interested to see if it stays flat or will a 3 p.m. booster, kick in again. We've seen that play out. Just yesterday, we had that kind of price activity. IT and small caps, two areas which are doing relatively better. So relative outperformance. Actually, not just IT, but, actually IT, Infosys and TCS. But you also have the old economy names like NTPC, Coal India, and then you throw in a HDFC Bank. That makes up the bulk of what is doing well on the index at this point in time. Nifty support comes in, around where I think where we are right now, which is about 19,700 or so. Actually, 19,688 to be precise is the 38% retracement of the recent fall. The market came up, it touched the 61.8 and now we are at the 38% level. So rounding that off, there's also a moving average there to about 19,700, which should be defended if the market wants to keep going higher. The trend still, of course, remains up. Rima.
Hi, those are M&M's auto sales numbers and they look pretty good right now. Much ahead of what the street was anticipating. 66,000 units is what they've clocked in and sold in terms of wholesale numbers for the month of July. It's much ahead of what the street was anticipating. Remember, their SUV, the XUV 500 has been doing very well, and that's generally been powering their auto sales numbers. We will await the tractor sales numbers as well and what they've done for the month of July. By the way, IT is having a good day for the second day in a row, right? The Nifty IT index is up 1.3% today. And if you take into account yesterday's gains and today's gains, the Nifty IT index has a rally of 2.8%. So that's clearly the leadership sector today. And names like a Tech Mahindra, it's rallied 5.5% over 2 days, and LTIMindtree, now a part of the Nifty, that's up close to about 3%. Midcap IT too is having a good session with names like LTTS, Coforge, Saskin rallying in line, in tandem with the frontliners. Railway stocks, another good day on the trot. IRFC Realty rallying in trade. PVR numbers were just out, and the stock, we should get that up for you on your screen. And since morning we were talking about how KEI has been the big laggard and it's underperformed. But right now, even Polycab, in sympathy, Polycab too is giving up all those, outperformance, the rally that it seems. Well, Polycab is down 3.5 now.
After a 30% run in the month of July, maybe the stock can afford to be a little sympathetic towards its peers. It's been a phenomenal run on Polycab, 100% in the last 12 months, 30% in July. Big moves coming in on those stocks. We'll talk about that as we go forward. By the way, I'll tell you that though the mid-cap index at the headline level is very flat today, the index is not telling you that there's any sort of a major rally. There are new names, apart from railways, for instance, that Rima mentioned. Now, when was the last time we were talking about a stock like Affle, which is up about 6%, RHI Magnesita, which is up about 6-7%, Dilip Buildcon just hit circuit, 20%. So within mid-caps, there's a lot of stock selection going on and newer names that are coming up. These are stocks on the move today. That's Dilip. Massive move on this one. So not all is lost. There's IDBI Bank, which is up about 8% as well. So really not all is lost. It's just one has to dig a little deeper, do a little more homework and go beyond the indices. It's that kind of a market. Individual stocks, lots flying around, including, let's not forget, Coal India. And Nigel will tell us why in just a bit. But on the large cap screen, that's a huge mover this afternoon. Nigel?
Well, that's right. You know, the Nifty Financial Services Index, suppose that's going to be important for the next 60 minutes or so. We have expiry that will play out. I'm just looking at the data points. If you pull up the intraday chart, actually, the Nifty Financial Services Index has moved back into the green. It was trading in the red just a short while back on. Now, I'm looking at the options data. There's writing being seen at around the 20,300 put out there. There's support at around 20,260. Because of the writing, we're seen at around the 20,300 put. So that's pretty much a reference zone on the downside. On the upside, you have the highest open interest at the 20,400 call. And that's why there is resistance at around 20,390. Now, we're a good 60 points away from those levels. But in case we need to see a further up move, then that's your reference level on the upside. 20,390 on the downside, 20,260. As we speak, that index is making a bit of a move and volatility is likely to pick up given that it's a Tuesday and we normally see that expiry play out. Big question is, how do you position yourself for the final hour of trade? Mitesh is back with us to help us out with just that. Hi Mitesh, good afternoon. What do you make of today's action? I mean, as flat as can be.
Good afternoon, Nigel. I think the Nifty is definitely flat and we are seeing a range which is very narrow today. But what is possibly good is the Nifty IT index, which has gained about 1.25% plus and is showing good pattern on the charts. I think, after the Infosys numbers, there was a gap down. I think it's approaching that gap down level again. But the intraday indicators in the last few days of correction post the Infi numbers had cooled off and are now again getting into buy mode, which means that the IT stocks could do very well going forward. So I have one name on the buying list from there. LTIM, which is, I think Subhi was also highlighting this term, that's a buy with a stop at 49.50 for targets of 5,100. And the other stock is on the sell side, which is Godrej Consumer, which I would recommend selling with a stop just above levels of 1,040 for targets of 980.
Okay, all right, got that. Thanks very much, Mitesh. We'll come back to you in the next half hour, talk about some more ideas. But in the meantime, let's look at some interesting stock movers. Now, we all remember what happened to Navin Fluorine. In fact, some of its peers like UPL, these companies have been struggling with a difficult environment on the chemicals side. However, the management commentary that's come through, I think there was a call that was happening earlier today, that management commentary has really fired up the stock. Sumitomo Chemicals is in focus as well. Sonal is here with the details. Sonal, something's definitely turned around after the management has spoken. What's the latest?
Well, for Navin Fluorine, the biggest statement is that inventory destocking, which most of the companies have been speaking about, will not impact the company's operations and has not impacted this time around in Q1 as well. It was because of some shutdowns that took place is why the company saw some decline in their profit numbers this time. So they say lower volumes came in because of shutdown of the HFO plant, which will be made up in Q2 and Q3. The CDMO business, where the CEO of the CDMO business did resign last night, that will continue to see growth, what they had anticipated earlier as well. There's strong order flow that continues to strengthen their long-term growth visibility in their specialty chemicals business, and they've also identified late-stage opportunities in the CDMO business, and a lot of them are work in progress as well. Most of the recovery will come in second half of FY24 itself, and their FY25 targets are as is. So they've not done anything to their guidance, and they continue to be very bullish on business prospects, a commentary that we've not seen from the other players, the likes of SRF, for instance, and that's where the stock is fired up. Sumitomo Chemicals, on the other hand, the stock was lower early in the morning. It has recovered, and most of the chemical stocks have after Navin Fluorine's conference call, but numbers were really weak. The revenues were down 26%, EBITDA was down 57%, margins were down almost 800 basis points, and net profit was down 55%. They also saw pricing pressure and demand issues in export and domestic markets. Across the board, their geographies have seen some decline, except for Japan, where they have seen a 47% increase on a YY basis, which is interesting because one of PI Industries' Japanese client also spoke about strong demand in that region. So Japan as a geography will be very important to track, but the gross margins were also down 400 basis points on a YY basis. Yes, weak numbers, but commentary going forward will be very important to track.
Okay, thank you very much for that. That's Sumitomo Chemicals. Dipan Mehta, director at Elixir Equities, is now with us on the show now. Dipan, on expected lines, all these companies have reported weak numbers. Dumping from China, weak export demand, they're sitting on high cost inventory, which has hurt the margins. Now, the question is, are we closer to the bottom now? Or is this weakness a good time to accumulate if one has a longer term, time horizon, 3 to 5 years? Because ultimately, these are all cycles. They go down, but they also eventually can go up. So how do you rate these stocks right now at the current juncture? And would you bet on them?
Yeah, good afternoon, Rima, and thank you for having me on your show. I think all corrections are buying opportunities. We are pretty much pleased with the way the earnings season is shaping up. And many sectors, I think the momentum continues. And I think optimistically also one has to take a view, given that we have pierced major resistance levels after many, many months, maybe more than a year or so. And I firmly believe that we have entered a new bull phase. And of course, there'll be corrections down the way, but this has got a lot more steam left in it. And broadly, I think we all are aware of the stories, whether it's banking, auto industry, capital goods. I think that's where all the action is. Somewhat mixed performance when it comes to the consumer-oriented stocks because of some demand, kind of subdued demand in a few pockets, a few segments and a few regions. But by and large, I think there are many industries doing exceedingly well. And there are many opportunities in the stock market. I suspect that we will exit from this earnings season with far more ideas, investment ideas than when we entered it.
All right, Dipan, stay with us. A whole host of companies like Bajaj Auto, Escorts, Eicher Motors, all of them have declared their numbers. In fact, we have Eicher's numbers, Escorts numbers, that are flashing for our viewers on the screen. Sonia joins us to give us a roundup about the auto sales numbers. Sonia?
Well, thanks a lot for that. So there are 4 large trends that we've seen in this month's numbers, the auto sales. Let me start with the commercial vehicle space, where there's definitely pressure that we're seeing in the sales this time. Both Tata Motors and Eicher Motors have reported a fall in CV sales. Tata Motors CV sales down 4% year on year, while Eicher Motors CV sales down 1.8%. The other big trend I notice is that exports continue to be on the weaker side, despite managements like Bajaj Auto saying that things will improve July onwards. So Bajaj Auto reported a steep 18% fall in exports, and that led to an overall 10% degrowth in their numbers. In the third trend, I noticed that the tractor segment has seen an improvement. You mentioned Escorts earnings as well. Escorts earnings have been very strong in the quarter gone by. Even for the numbers for the month of July, domestic sales growth came in at almost 10% for Escorts. The management says that retail demand will pick up in the festive month starting September. In fact, even if you pour through their Q1 numbers, there's been a significant jump in the EBITDA performance and very strong top-line growth for Escorts as well. M&M too reported a domestic tractor volume growth of 11% year-on-year. And the fourth trend is that the passenger vehicle segment, especially the SUV segment, has seen a very strong growth. M&M just reported a passenger vehicle growth of 29% year-on-year, and they clocked in the highest ever SUV domestic sales of 36,200 in a single month. Back to you.
Sonia, thanks a lot for that. We'll just pull up those Escorts numbers. The stock has moved to the high point of the day. On the top line, there's a growth of close to around 15%. The EBITDA is up by close to around 60%. And the net profit is up by more than 90%. The margin as well has improved by close to around 400 basis points from around 10 to around 14%. Dipan, what do you make of the auto sales numbers and in particular Escorts? As we speak, that stock has just taken off. The margin expansion is something that the street likes, though the stock has run up a goodish bit.
No, I'm pretty okay with the numbers which have come through so far across all the auto numbers across all segments. And Escorts, I think after many quarters, is showing some life again. And I think phenomenal set of numbers. One needs to go a bit deeper because volumes are pretty much flat. So I'm sure they are getting the benefit of higher realization. And also, I think profit margins have moved up because of lower raw material costs. So at least they would have passed on the cost increases. So I think we saw your Maruti numbers also were exceptionally good, I thought. So on the whole, I think auto remains a very strong play in the market. And there could be minor fluctuations. I think month-on-month sales may show a different picture. But broadly, the entire story in auto industry is higher realizations per vehicle. I think in the case of Maruti, it was almost 14-15% higher average selling prices. And that's true for all the auto companies, even the two-wheelers. So I think that's keeping the performance going for the auto industry, and we remain overweight on that sector.
Stay with us. By the way, before we slip into a short break, I was highlighting just a few minutes ago about the Nifty Financial Services Index. That's moved to the high point of the day. So their expiry is playing out, and it seems it's making a bit of a fight back, though it's around 40-50 points away from the key resistance zone. For the time being, slip in a short break, come back. We'll continue our chat with Dipan. Pashupati Advani as well will be joining in from Global Foray.
Pin code in town. This is the latest address of the diamond industry in India and the global markets as well. This is the largest office in the global markets. The place is 9 big buildings, 15 stories each, and offices are as small as 300 square feet to as big as 1 lakh square feet as well. So it clearly is a congregation of everybody who's working into diamond industry, from makers, polishers, cutters, manufacturers, jewelry makers, exporters, importers of diamond, polishers, cutters. So this place houses them. Plus, there also is banking, financial services, custom clearance, all of that. There are nearly 4,500 offices inside, which are all pre-sold even before the construction began.
Welcome back. One of the important stocks for the day today is Hero MotoCorp. It's under pressure after sources tell CNBC TV 18 that ED raids the company chairman's Pawan Munjal's residence. Tim C joins in with the details. Tim C.
Well, that's right. The Enforcement Directorate has actually registered a case against Hero MotoCorp and Pawan Munjal under PMLA provisions. And thus, based on this, the Enforcement Directorate is doing raids across a dozen of locations being covered, including the residence and official premises. Well, according to sources, ED has alleged that these entire investigations are going on based on a case that recently DRI, that is Directorate of Revenue Intelligence, had caught, where they had caught hold of a passenger with a huge amount of foreign currency, undeclared foreign currency, and based on that investigation, they got leads towards Hero MotoCorp. Let's see what happens finally when the case closes or gets further expanded and certain investigation details are being shared by our sources. But yes, first income tax, then DRI, and now VD. It looks a little difficult for Hero MotoCorp.
Yes, got that. Thanks, Timsy, for the update over there. Stock has been down ever since that news came in, about 3% lower. Deepan, now this is one aspect of it. I mean, we have to see what comes out of the regulatory agencies. But even otherwise, it's been a very interesting, tough going, right? In the premium motorcycle space, where Hero is obviously.
Sorry, I think Hero has not yet reported its July numbers also. That's the other thing.
Yeah.
I think come out late.
But it typically always comes out later, right?
Later.
It comes out in the evening, post markets.
And what I'm saying is that the number also is expected to be, at least that's what the buzz is, going to be substantially weaker than what the poll
But you remember, even last month was a big miss
the
compared
retail
to
numbers
what.
are a big miss.
Yeah. So, I mean, that's what I was coming to, Deepan. There's this news, which of course we have to bear in mind. But then there's also the overall business question, how the numbers will be and whether they can make any headway with the Harley tie-up, whether that whole premiumization thrust, whether that really works for them or not. Given the fact that the stock has run up more than Eicher for sure this year, what would your advice be? Stay invested, stay away, or actually buy and use every dip to buy? Which camp would you be in?
We are very, very positive on Eicher. Usual disclosure, we and our clients are invested in it. So I would suggest a switch from Hero MotoCorp to Eicher. I did not know that Hero MotoCorp has outperformed Eicher, but I think that cannot last for long. You will see Eicher's numbers when they come through will be quite phenomenal. And I'm pretty certain that the secular momentum has started in Eicher Motors again. And it's the last company to be impacted by electrification of two-wheelers. I think the threat will be felt first by Bajaj Auto and Hero MotoCorp in the commuter space. Now, I know some competition has emerged for Eicher Motors, but their volumes are really small, and it'll take a while before Bajaj, Hero MotoCorp, or TVS or anybody else even comes to close in terms of setting up the distribution network or the brand recognition, or for that matter, the acceptance from the consumer side. So they will chip away at some market share, but on the whole, I think the market and that particular segment of premium motorcycles will keep on expanding as well.
Yeah, I mean, I was just talking about this year's performance for our viewers. I mean, that's 1 month. Eicher this year is up the least out of the trio. It's up about 6%. Bajaj Auto has had the best run this calendar year with about a 35% gain. And Hero is somewhere in the middle with about a 13-14% gain. But of course, Deepan makes it clear that he will stick with Eicher as his top bet. Since we're on the subject of automotive, Deepan, I wanted to get your thoughts in on Maruti. The market seems to have digested the whole news around the Gujarat plant pretty okay. I mean, the stock's fine. What do you make of it? Not just that news, overall earnings. How would you sort of position on Maruti, if at all?
See, I was pretty disappointed with this entire Gujarat plant, it going to the parent company. In fact, on many public forum, I had criticized the management. There was enough cash in Maruti to do the expansion plan by themselves. And, Maruti management went into a lot of, I would say, overdrive to convince minority shareholders to permit Suzuki Motors to set up that plant. And now I think after a few years coming back into Maruti, it just doesn't make sense to me. But anyway, it's positive from minority shareholders' point of view. The last, conflict of interest does get resolved because of the transfer back into Maruti. I'm just curious to know what the profitability of Suzuki Motor Gujarat has been, because that would have got attributed to the parent company, and that is much extra Maruti would have to pay. Had they done the plant in Maruti itself, then we minority shareholders also would have got a share of the profits.
I think this, isn't it a zero EBIT company, SMG?
Yeah.
Yeah, so, it's a zero EBIT company, Dipan. You were saying you didn't know the profitability.
No, but I think the larger argument was why let the parent do it? You have the cash, you're going to make in India, sell in India. Why wouldn't the listed entity own the asset, which I think finally is happening? So, Dipan, you're basically not you're not concerned about in the near term the cash outgo that might sort of impact EPS. Just in the near term, you think overall this is something that is in the right spirit of things?
Absolutely. I think it never made sense to have manufacturing being done by the parent company and then on transfer pricing basis, on a cost basis going back to Maruti. I think it was a bit of a convoluted scheme, if you ask me. So I'm pretty happy that finally, it's everything, all manufacturing getting merged into Maruti, and Maruti generating fabulous cash flows. They can easily invest in the production capacity in acquiring this particular plant. Look at the kind of order book position which they are sitting on, and all the new models have been extremely well received. So I think next 2, 3, 4 years, I think Maruti looks set for greater heights from these levels. Also, having said that, our positive view, of course, is because we and our clients are invested in it, and I would say that it's amongst the best four-wheeler stocks to own in the market.
Got it. Dipan, thanks very much for your time. Great speaking with you. Appreciate you joining in with that perspective. Well, Bandhan Bank is in focus today, but the back of a brokerage upgrade. Abhishek is here to tell us more. Abhishek, take it away.
Well, Prashant, Bandhan Bank has been underperforming for quite some time. So if you take a look at the peer comparison per se, the valuations of Bandhan Bank is one of the lowest when compared to Equitas Small Finance Bank, Ujjivan, Credit Access Grameen, or even Fusion MFI. So over the last 1 month, Bandhan Bank stock price has actually declined by 6% when compared to gains seen in other listed entities like Ujjivan is up almost 31-32%, Credit Access Grameen is up 19%, Fusion MFI is up about 22.3%. So the comparison is largely done for players with a huge MFI exposure or huge reliance on the MFI portfolio for their growth. So we have Bank of America who has written on Bandhan Bank. They have upgraded the stock recommendation to buy from neutral. Target price has been increased to 300 from earlier target price of 260 per share. They say that the long EPS downgrade cycle is actually bottoming out for the bank. It's been one of the worst performing Indian bank over the last 1 year when compared to benchmark indices like Bank Nifty, etc. Now they see clarity emerging on most fronts, and they see scope for positive surprises going forward. So the valuations that Bandhan Bank is trading right now at around 1.5 times price to book value on a 1 year forward basis is offering enough margin of safety for investors, is what they say. So in FY 24-25, Bandhan will likely see the best earnings momentum in the sector per se. So they increase the EPS estimate anywhere between 2% to 7% over the next couple of years. And credit costs, they say that it should surprise positively for the bank. Back to you.
All right, about time. I mean, it's been a huge underperformer since it made it to the market listing. And so many false starts, but has never really done anything very much. I saw a flash on JK Infra, which I think they've won some orders, etc. And contractors is the others. Contractors, I mean, pure construction companies have also been doing well. I mean, NCC, etc. we've highlighted. But one name which has done very well is Dilip Buildcon. I just looked at it before I came in. I think it was up about 12% before we started the show. It's limit up now, 20%, Dilip Buildcon. I mean, this used to be a name quite a bit in discussion in the 2016 to 2018 kind of small cap, mid cap rally. 2018 was the peak back then. I think it got to a high of almost 1,300, and then it had a pretty steep decline. But from 170, 175 levels in the start of May, it's now 300 plus. So that's a very large move on Dilip Buildcon coming through. Pashupati Adani is with us of Global Foray. Pashupati, good to have you with us here. Good afternoon. Thanks very much as always.
Hi, Prashant.
Smile on your face as always, which means making money as always. Pashupati. But where is the question? And is it getting a little harder? Go on.
No, of course it's getting a little harder, and I think the market's like almost at that all-time highs. So we might as well, as I say, ride this Ghoda and keep going. I think the challenge that we're facing is a little bit of slowdown from overseas, and money is getting tight over there. We're seeing a little bit of FI selling also. And what is concerning me is oil price going up and rupee getting weaker. I think those two things are tough And I think we need to deal with that. Of course, we are benefiting from the fact that we're getting some cheap Russian oil. And I've just seen a whole bunch of Naira petrol pumps. I guess that's Russian oil refined in India and made in India and sold to us. So I think that's been good for us. But the rest of it is, the reality is that we are hurting with high oil prices. Prashant?
All right. Hi, Mr. Advani. Good afternoon. Nigel on this side.
Nigel.
Well, what's new then? You know, the last time you joined, you were telling us something about Infratel. That's something that you were studying or you had got into. The prior time we were talking about Paytm, which you got in and got out as well. What's new? What have you bought? Tell us which is a couple of stocks.
Well, Paytm's headed back down. I mean, I don't know where. I haven't actually looked at it today, but I think it's up a little bit, but it's basically heading back to the low 700s, in my opinion. But I think that, you know, there are things that are here to stay. Infra is here to stay for sure. You mentioned today about J. Kumar Construction getting, J. Kumar Infra getting a big order. There are big orders out there, and those companies are going to benefit. I think they're only constrained by the amount of work that they can actually get accomplished. I mean, they can today sit back and choose the kind of work they want to do. You know, I happen to know this promoter. He's a great guy, and he's definitely, very diligent in his work, and he's all over Bombay. In fact, those of us in suburban Bombay hate him because we see his blue boards all over the place blocking the roads. But there is a light at the end of the tunnel. Dilip, I don't follow. Yes, ma'am. Yes,
no, sorry. I'm sorry. I had a sort of out-of-body moment. It seems like you're reading my mind when you said some of us hate those boards because they disrupt life so much. But yeah, it's the same thought that crosses my mind. That guy has the bulk of the contracts in suburban Mumbai. So that explains purely from a business and stock market rationale why you would like it. But go on. You were talking about Dilip as well. Which contracting
Dilip, I actually don't know.
Would you? Okay.
Dilip, I don't know. I mean, as I said, JK Infra is good. So I think that, we need to be in this. Since these companies are getting contracts from the government, we also need to be in cement and steel, which are the byproducts. And, I think we're still moving in that direction because the government is actually spending money and leading from the front. And I think that's very important. So Pashupati, since you are convinced on some of these road contracting companies or infra in general, let's go beyond roads and EPC. Would you look at owning the big giant like an L&T, for instance, or how else? If you want more exposure towards infrastructure in the portfolio, how would you play it? See, what happens in all the sectors is that top of the sector is trading rich compared to the rest of the market, whereas the so-called mid-caps or the middle-term companies are trading cheap. So I would rather take a bet on the middle-term companies and hope that there's a convergence to the mean. And, so I would rather be in a JK or a Dilip or some one of the others rather than being in L&T, but that's a personal preference. Obviously, FIs come in and they buy the top and they buy the L&Ts of this world and pull the whole market up, which is what we're grateful to them for.
Pashupati, last time you told us a couple of months back that how oil marketing companies were a good tactical play. Any other tactical plays that come to your mind right now, given the way the macros are turning? You spoke about crude prices rising. In fact, all the commodity prices have been inching up. So are there any tactical plays that come to your mind?
There is one sector that I've been flogging like a dead horse, which has been doing worse, which is the pharma sector. But I am seeing reports from all sorts of places where there are some. They are going to be doing better, but again, that we are the diabetes capital of the world, we're the blood pressure capital of the world. So those companies will continue to do well. It's just that the government is, fortunately for us consumers, putting caps on the prices of what they can charge. But at the end of it all, they can just keep producing, and as long as they're producing, we have a consumer base that is just growing. And it's sad, but we are not as well a country as we would like to be.
Right. Pashupati, have you given us ideas yet?
Sorry?
Have you given us ideas yet? Stock ideas? I think Nigel was asking you.
Well, as I said, you can buy the cream of the pharma crop. I'm actually quite happy about being in telecoms, all of them. The last time I think I mentioned about the tower companies, because I think that they're also going to benefit as the ARPUs go up. So there are sectors that we can be, but and oil marketing companies, I guess. Oil companies themselves also should benefit because of the fact that prices are going up, and those that are taking it out of the ground are definitely going to do well. I personally, even though banks have jumped up, I am not so wild about banks. That's my personal opinion, and obviously the market is carrying me out as a result of it. But those are good enough ideas, I think, at least poking people in the right direction.
No, but what about pharma, Mr. Advani? What do you like in pharma? Give us a couple of stocks.
I mean, the big ones have become cheap. So, I mean, why not buy the cream of the DRLs and the Ciplas, and the top end of that are the ones to watch. And, I've been kicked because they've come down, but I think that, now's the time to nibble into them again.
So that's some pharma, some infra. I'm going back to what you said. You said Paytm's coming down, Pashupati. Tell us your thought process there. And beyond Paytm, are you willing to look at any of these other new kids? I mean, now not so new kids, these new age stocks where companies are talking about increased profitability. They seem to have kind of got their feet on the ground. Anything else you're looking at there?
Yeah, for sure. But I think that now they will not get any new private equity money or public money unless they're making actual cash profit. Paytm was over 800 last week and is now in the high sevens. I think these stocks are just floating, and if you want to participate in this new business, one should definitely buy some of them. But the thing is that I am seeing a little bit of people tightening their belts a little bit, at least in the middle class, and therefore you are seeing prices of these come down because people are not as exuberant about going to a Nykaa or going to ordering from a Zomato as they used to be. They're more cooking at home. So I think there will be some change in the behavioral patterns, which will affect these new age stocks. Surabhi?
Pashupati, thank you very much for joining in and sharing your thoughts on the markets and individual stocks. Need to get into a break. But with the news that ITC and HUL are dragging now. ITC is at the day's low. HUL has a cut of close to about 0.5%. We just get those charts up for you on the screen. Get into a break, and on the other side, we'll get you a check on what dealing rooms are saying in our segment, D Street Chatter, and we'll also get you a few BTST calls.
Welcome back. Well, just keep an eye out on a couple of stocks. GMDC, the stock is down sharply actually, and the numbers are looking quite weak. If you look at it even on a sequential basis or on a year-on-year basis, these numbers are looking weak. So on a sequential basis, you have the revenues that are down by close to 20%. On a year-on-year basis, it's down by close to 35%. So they don't have operating leverage that will play out. And the margins, they're down to 32%, which compares with 42% on a quarter-to-quarter basis. And on a year-on-year basis as well, it compares with around 38%. Explains why that stock has moved to the low point of the day. We'll have to find out whether or not there was one-off, because there's such a sharp decline on the top line itself, a 35% decline. So was it because some kind of flooding, unseasonal rains? We'll try to get you some clarity. For the time being, after the big run we have seen, there is some profit taking we're seeing on that stock. But as promised, well, it's that time of the day when we get you an insight into D-Street chatter. Nimesh joins us to tell us exactly what's happening. Hey, Nimesh, what are you picking up?
Nigel, a bit of a choppy day of trade because there is nothing much happening on the index level, but there is a lot of outperformance in the broader market. So the momentum in the broader market continues, and that's why you're seeing a lot of action in the mid cap and small cap space. In terms of flows, the feedback is the FIs have turned slightly sellers in the broader market. So it looks like that data also suggests for the last many days that the FIs are net sellers at the margin. So that seems to be the trend today as well. In terms of sector, which stands out for me is clearly the PSU basket. The entire PSU basket is well bid. Again, in today's trade, there is a lot of action in the PSU stocks, and within PSUs is the power names which have been well bid by the larger institutions. Of course, the rail PSU is also done well, but from the institutional point of view, it's a power space which is in well bid by the large institutions. I guess from a technical point of view, this 19,800 seems to be a bit of a resistance on the upside, and that's playing out for the last many days. But as I said, a bit of choppy from an index point of view, but there is a lot of action in the broader markets.
Let's get straight to that then. Individual stocks, what are you picking up, Ramesh?
So as I said, there is a lot of action in the broader markets. A lot of the stocks in today's chatter are part of the mid cap and small cap. The first stock on my list today is Dilip Bilkon. Just look at the chart of that stock, locked at 20% upper circuit on huge volumes as well. I believe some HN actors have turned active buyers in that particular stock. Interestingly, there is a board meet scheduled next week, including the results. There's going to be a possible fundraising as well. So that could be an interesting thing to track as far as Dilip Bilkon is concerned. The second stock is Excite. Well, the stock yesterday fell after the results. Today there's been a big up move in that stock of 5% last when I checked. But contrary to the screen, there is selling pressure in that particular stock from the larger FIs. So it looks like some bit of profit booking is happening in Excite at these levels. The third stock is IRFC. Again, part of that entire PSU stock basket, which is doing good. IRFC is well bid by large institutions. In fact, for the first time, there is an interest from the larger FIs as well in IRFC. So the delivery volumes are going to be quite high in today's trade as well in that particular stock. And the last stock is UBL. Again, one stock didn't do well immediately after the results, but now there is a bit of buying traction back. Some bit of interest is back from the larger institutions as well. I guess in UBL, apart from the numbers which were weak, the next big trigger would be the next the new CEO appointment, which the management said in the con call that potentially it can happen in the month of September. So that could be a next big trigger as far as UBL is concerned.
Nimesh, we've discussed Dilip Bilkon. I think the last time we discussed this was a few years ago, maybe on a regular basis. But the stock was at about 170 rupees late April. And before today, I mean, it was at about 270 odd levels. Today, of course, 320. What you're picking up the some HNIs, etc. buying, have they been buying for the last couple of months, or this is the first that they've actually entered the stock? And any color? Yeah.
Prashant, so in terms of feedback, the feedback is that maybe it's not like they've been buying for a very long time now. It looks like it's a fresh buying for the last couple of days. And I guess, as you rightly pointed out, the stock had hit a low of 157. Today, I think, 290 was the 52-week high on the stock. And once that was taken out, you've seen a sharp up move in the last 2 hours of trade. So it's an HNI buying, plus the fact that there is a bit of technical breakout as well, which has led to a big surge in that stock, at least in the second half of today's trading.
Phenomenal move there. Thank you very much, Nimesh, for joining in. 20% upper circuit. Mitesh is back with us for a few BTST calls. Mitesh, at the index, things are very, very ranged. And today is the, the Nifty weekly expiry on the banks. But yet we're not seeing too much action as we typically do on a Friday afternoon post 3 p.m. But what would your BTST calls be?
I would go with the BTST on Info Edge or Naukri. I think that's showing good traction again, the IT name on the list. Here, recommend to stop at below 46.25 for targets of 4,700. And the other one is Page Industry. The stock actually started to move yesterday. I think today we are seeing good follow through. Shows that the chart shows that there will be likely more momentum on the upside. So again, BTST here with the star below 38,400 for targets of 39,250.
Okay, thank you very much for that. Let's talk about the big earnings that we're going to be watching today and tomorrow. Manu joins in with Titan. Mangalam joins in for more on that. Mangalam, they've already reported their Q1 update. So what should we expect now? Is there a possibility of a surprise?
Well, there is no possibility of surprise for Titan, largely because, we have a cheat sheet with us. The company has given us the Q1 update. But important is that what happens in the remainder of FY24, because of a bunch of, Hindu calendar related reasons, there is the inauspicious period of Adhik Maas and lower number of wedding dates. So to that extent, the management commentary is more important than just the numbers. As far as the numbers are concerned, we already know that the standalone revenue growth for the company would be 20%, led by jewelry revenue growth of 21% itself. Analysts have plugged those numbers in, and they believe that the overall revenue will grow at around 15%. The EBITDA goes at around 10%. You're looking at a margin expansion, or rather margin compression, by about 50 basis points, so 12.5% versus 13%, and the net profit grows by about 8.5%. Apart from the jewelry business, we will see growth in their analog watches, which saw about 8% growth. Digital watches saw about 84% growth, and importantly, the new business of the company, which is fragrances, saris, and all the others, have grown in a much stronger fashion. So any commentary with regards to expansion there would be crucial as well. The stock very close to its all-time high and trading at around 69-70 times one-year forward earnings. Never been cheap, but good numbers coming in.
All right, Mangalam, thanks a lot for that. Well, I'm looking at Ambuja Cements. That comes out with a set of numbers. And this time around, we look at the standalone numbers, because in the consolidated numbers, ACC's numbers as well will reflect. So running through the expectations, top line growth of close to around 11%. On a low base, EBITDA number will go up quite a bit. You'll go up by more than 30%, and that will mean margins will expand. You'll wonder then why is the PAT down substantially? Because in the base quarter, there's a higher component of other income. So stripped on that, actually, it'll be a good performance coming in there. Now, what are the key factors you're looking at? Volumes, they're expected to jump up by close to around 15%. The street, there's a very wide range between 8 million tons to around 9 million tons. We have gone with a number of around 8.5 million tons approximately. Good demand in the first half of the quarter. That's what helped them. Realizations, though, they'll be softish. Will be down by 3 to around 4% on a year-on-year basis. Even on a sequential basis, they could be down by close to 100%. So that limits the gains that we're going to see in terms of volumes. Margins, well, they'll expand. Because you have operating leverage that will play out. You have lower input costs because petcoke coal prices as well have cooled off. And also the unitary cost will be sharply lower for Ambuja Cements because that Himachal Pradesh unit was shut in the previous quarter. And that will come, that will help them in this quarter since things have restarted. Management commentary will be crucial. What are they saying with regard to the plans ahead, demand, expansion, and any kind of inkling if in fact we could be looking at a merger at some point of time. So that's expectations with regard to Ambuja Cements. For the time being, though, we'll slip into a short break. We'll come back, we'll continue our focus on markets, and we'll have Jay Bala of Cash the Kiosk, who will be joining in to give us his view on the markets. Don't go anywhere.
Pin code in town. This is the latest address of the diamond industry in India and the global markets as well. This is the largest office in the global markets. The place is 9 big buildings, 15 stories each, and offices are as small as 300 square feet to as big as 1 lakh square feet as well. So it clearly is a congregation of everybody who's working into diamond industry, from makers, polishers, cutters, manufacturers, jewelry makers, exporters, importers of diamond, polishers, cutters. So this place houses them. Plus, there also is banking, financial services, custom clearance, all of that. There are nearly 4,500 offices inside, which are all pre-sold even before the construction began.
All right, welcome back. 10 minutes to go for the market close. The market's not doing very much. I mean, it's down 20. It's been down 20 for the most of the day. You know, I want to just highlight Thangamile Jewelry. So it had a parabolic kind of a move from 880 rupees. It moved up to a high of 1440. I mean, it's one of the most stunning moves over a 5 or 6 day period. But Thangamile had that. But and the high was, as I said, 1450, which was yesterday's high. It cooled off yesterday, and it's taking a bit of a fall today. So 10% fall from 1450 clean straight down to about 1140 odd rupees or so. By the way, volumes are a fraction of the last couple of days. So 2.6 odd lakh shares on the NSE is what I'm able to pick up. Results were good. But 50-60% in 5-6 days flat, I mean, that kind of was hard to digest. Today, it is seeing a bit of a pullback. But Subi, we have, I think, Jayawal already with us.
Yes, we do. And Jay has, of course, been watching out for the Nifty, holding on to a slightly more positive construct for the last couple of weeks. Let's figure out if that's still the case. Jay, good afternoon. Good to have you on the show, as always. So, I was just looking at the last couple of days. It's been 7 days of consolidation since the Nifty took aim at 20,000, right? That 19,991. That high happened 7 trading sessions ago. So it's been consolidating, but it hasn't really broken down at all. What is your sense as the index spends more time at these levels? Is that a positive bullish sign, or is it setting itself up for maybe a bit of a mini decline?
Yeah, there are two possibilities here, Subi. As long as the Nifty can manage to hold 19,563, I would consider it bullish. And for the there's the short-term correction that can happen for the Nifty comes below that level. But if the bears want to avoid that short-term susceptibility, we want to see 19,867 taken out. If that's taken out, we can have fresh record highs somewhere close to 20,200. But I think the markets are slightly susceptible from the point of view because FMCG is looking tired and looking to turn. But there's no breakdown. And banking index, once again, tired and looking to, and it's already, showing signs of weakness. So these are the factors that are, pulling the Nifty at cross currents.
All right. Hi, Jay. Good afternoon. You're sounding a little bit cautious. I was feeling a little bit worried about the way the dollar index is moving. We thought it was done and dusted, was moving towards 99. Suddenly it's at around 102 plus. Your view on this asset class from an emerging market perspective, it's rather important. We wanted to cool down, but it seems to be popping up.
Spot on, Nigel. This is another spot of bother for the overall equity markets. I had said last week that if 101.92 were to print, there is a very high probability that the dollar index has bottomed and it's turning for the medium to long term. And it has done that. And my opinion is that the dollar index is going to surprise a lot of people on the bullish side. A bare minimum of 109 to 110 is coming. It won't change if the dollar index were to drop one last time to 99, but that's become a minuscule possibility at the moment. But the medium-term setup to, from 12 months plus perspective, my opinion is that we are heading to somewhere about 120 plus. But we'll see. The decision point is about 109, 110. We'll evaluate what the index does around 109, 110. So we, at a minimum, getting 109 to 110 for the dollar index.
Wow, you're saying 109, 110 is coming on the dollar index. If that happens in the next 12 months, what happens to the Nifty as a broader call? You've given the near-term levels, but just over a 12-month period then, what happens to risky assets like the Nifty? And do you have any thoughts on the dollar index? Because that's also very close to that 4% band.
Yeah, see, recently or last year, the Nifty managed to do quite well with the strong dollar. So, I would take each asset class on its own merit. But I think the last decline for the dollar index brought a lot of asset class into sync and probably trying to trigger an inverse correlation. But, we'll evaluate as the markets unravels. But at the moment, we'll treat each asset class on its own merit. Probably the USD INR cross has been consolidating since last November, and that could see a breakout. So we'll watch out for the breakout level of 83 of the USD INR cross.
Some macro watchers who kind of believe that, Jay, who believe that the dollar perhaps is headed is going to be much stronger, also kind of link it back to what's happening in Japan. Japanese yields have been rising, jumping. Finally that market is starting to yield some real returns. And what that may mean for US treasuries and consequently to the dollar. I mean, are you watching that, and anything you want to share there?
Yeah, of course, Prashant. I think the Nikkei, because of a weaker yen, it's trying to target the all-time highs that registered in 1989. So I'm not too sure if it get past that, but it'll probably try to get close to that. The yen was considered as a safer haven than the dollar, but the market is trying to say that that's not the case. The dollar is still the safe haven. And once 145 is taken out for the USD JPY cross, we are heading for fresh multi-month high past 152 that we registered in 2022. I put out a tweet on this in November 2022. I'm expecting somewhere past 160s for the USD JPY cross. And the US 10-year treasuries, it's on its way to about 500 bips. That has been my medium-term forecast, and my long-term forecast is past 700 bips. You can consider this as strong growth or inflation is coming back. I'm not too bothered about it. I'm interested in where the market is heading and how to monetize that. So as I've been saying, the pullbacks for the US treasuries, the treasury yields to be more precise, is going to stay about 350 bips, and it's on its march towards 500 bips. And if you take the even Indian treasuries, a pullback towards 7.06, 7.04, and then this might be the start of a process to hardening of yields somewhere close to 790 to 800 bips. But that's once again a long-term forecast. But I don't think the recent lows that we saw for the India 10-year yields at about 6.9, I don't think that's going to take.
Okay, by the way, those are Maruti's July auto sales numbers, and they look much lower than what the street was anticipating. 1.59 lakh units is what the company has sold in, these are the wholesale numbers, in the month of July, but the Nomura estimate was much higher. And the problem for Maruti has been the small car space, where the company, generally the sales have been weak. Sorry, that's the right number. The total sales have come in at 1.81 lakh units, but that's again slightly lower than what the Nomura's estimate was. But what's happening in Maruti is that the small car sales have been dwindling, coming down due to generally pressure at the lower end. But on the other hand, the SUV space, which they got in very, it was a late entrant, but the SUV sales have started picking up, and those two have kind of started offset each other. One more stock, Arvind Smart Spaces. This is the real estate arm for the Arvind Group, and the stock is up 11%. They've signed 2 golf-themed development projects in Ahmedabad, where the revenue potential is 2,300 crore rupees. And look at the way the stock is reacting. I think that's pretty much the market cap also of the entire company.
Okay, well, those are some of the late movers with smart movers nonetheless. And with that, we are barely a minute away from the close for today's action. Thank you very much, Jay, for joining in. Good talking to you as always. Look forward to the next one. We are ending absolutely flat on the indices, the Nifty, the Sensex, the Bank Nifty, and even the Midcap Index. It's as if the market simply didn't move today, but that's far, far from the truth, because you have to go down to stocks to see where the action is. Coal India on the update moved very smartly. It actually is the top Nifty gainer as we wrap things up this afternoon. 5% up on Coal India. NTPC, relentless run continuing. Another 3% added today. Technology was actually a pretty decent theme. Tech Mahindra, HCL Tech, TCS, Infosys, Wipro, all your large cap tech stocks have managed to put on between 0.5% to about 2%, depending on which one you're looking at. Decent buying in some auto names, Eicher Motors, M&M, pretty okay. Of course, Hero Motors is a different story altogether because of the raids that have taken place at the chairman's residence. That stock's ending down about 3.5%. The weak hands in the market today, Reliance, SBI, L&T, these are your big boys which have cooled off, as has Power Grid. This is probably the most severe, disappointing reaction on the large cap screen in terms of earnings. Went into earnings on a high, but the numbers didn't quite perhaps match expectations. 5% down on Power Grid today. Rima?
Okay, some other movers in the broader markets. On the way down, GMTC's numbers disappointed. The stock ends lower by nearly 6%. DLF, there was a large block. Sources suggest the promoters have sold part of their stake. The stock was weak in trade. In fact, jewelry companies have been under pressure. Thangamayil, we spoke about, but PC Jewelers too has a cut of close to about 3.5%. On the gaining side, Dilip Bilkon catches your attention, 20% gain, very large volumes. IDBI Bank up close to about 8.5%. And then railway companies like IRFC, Realtel, also up and about in trade. And KEI, how can we forget that? That was the earnings disappointment for the day.
Oh yeah, that was the earnings disappointment. But you know, there were other losers as well, right? I mean, Polycab and Phenolix Cables. I think we discussed some of this in relation with KEI earlier on. There was a Keynes which was down today. There was Trent which was down. Aptus, which is a small home finance company, that was down sharply. DLF is down about 3-4%. So there is, I mean, enough and more which was moving. And by the way, I'm looking at the overall kind of advanced decline and stocks which moved up and down. 1,400 up, 900 down. But even actually on the way down as well, enough volume. So it was not a thinly traded market on the way down as well. So just to keep that in mind as well. But quiet, very, very quiet day. Just 16, 17 points down is what we had. We'll say goodbye from all of us here. Thank you very much for staying with us. But don't go anywhere. On the other side, our Tuesday special Commodity Champions comes up next.